Good evening and welcome to a new show of Markets Tomorrow. It was a day of consolidation for Indian markets, but what lies ahead is the more important question.
Absolutely. So that's exactly what we will be discussing with our three experts. So let's run you through the lineup for the day. Andrew Holland, CEO at Ambit Investment Advisors, will be joining in on the show. There's Ashwini Gujral, fund manager at ashwinigujral.com, and Pankaj Pandey, head research at ICICIdirect.com too, will be with us. I'm going to start off with you then, and Pankaj, we've been flagging off lots of targets on the Nifty, but do you think that perhaps the markets are running ahead of its course given the fundamentals continue to remain rather stagnant? What's your call for the rest of the month at least?
I think if you look at sentiments have definitely improved post-election outcome, whereas from an earnings perspective, I think there's hardly any change which we have seen. So all your leading economic indicators, be it the decline in the CV continues, the cement or the steel sector continue to be growing in low single digits. So in that sense, there is no data to suggest recovery in the overall economy. However, the sentiments have definitely improved, which can fluctuate over the next 3 to 6 months depending on how the global or the domestic events shape out. So in that sense, probably we would expect markets to remain at elevated levels. But for the next 1 year, we would expect markets to do a similar what it has done this year, that is performance in line with the earnings expectation. So this year earnings are likely to grow at about 10% and probably next year it will be similar kind of a range. So which is what one can expect from the markets over the next 1 year. I think from a shorter term perspective, unless 6,500 levels get taken out convincingly, I think that will act as a resistance. And on the support side, I think 6150 or 5970 are the two crucial supports for the month. So if these levels are breached, probably the tide will turn in terms of correction getting extended.
Ashwini, whereas it was not a very great day for the Nifty, Nifty was not the big story today. The big story was somewhere large cap IT, which made a roaring comeback. Now the correlation trade for IT is not at play. IT has not been a performer in last 6-7 weeks. What do you make of today's price action in IT?
See, the problem is that some of us want the market to move every day. Also, we are expecting the market to move because of the election results, forgetting that the market has already moved before those election results, and now given that we have almost 5 months, we cannot keep moving up day on day. So chances are that defensives come back into play while all of these rate sensitives, policy sensitives, they correct, and then they keep passing the baton as we get closer to the elections. So I think pharma, IT, etc., they are doing their holding the market type of job, and we will see 6150, 6200, and maybe a range of between 6150 and 6350, 64 for a while before again the market picks up steam for elections. So I don't think December is going to see 7200 or even January. You will get many ups and downs before the real thing starts for the election results.
Clearly, the stock of the day was NTPC. It crashed something like 12% on an intraday basis on the CERC draft norms that unveiled, that said that it could lower the power tariffs from FY15 to FY19. And you have the analysts who also said that the estimated profits are likely to be hit by something like 7%. And the incentive charges and the tax impact that will be falling on the company's ROE will hit the profitability. Andrew, these guidelines gave a clear message that, it's time to regulate, control the returns of some of these companies. Do you think if the intention is to regulate and control or cap the returns, that this is bad news for the overall sector because it has suffered a lot owing to government policies?
Yeah, they are draft guidelines. I mean, if India is going to, improve its growth, and obviously power is going to be part of that equation, and there's huge investments that's needed. So I'd be surprised if if the full form of this is actually reality. I don't think you can start limiting ROEs in a sector which is starving of funds at the moment. So unless you make it attractive enough, no one's going to come. That's for sure, and no one's going to invest. That's for sure. So I see these as draft guidelines. I wouldn't read too much into it right this minute.
Pankaj, do you think that overall for the IT sector, which we just flagged off, that this kind of an up move is likely to continue, particularly when it comes to the large caps?
I think if you look at large caps, they are quite well valued. But having said that, I think the growth rates for these companies are quite good also, given the considerable base of revenues and bottom line which they have. So TCS, for example, from FY13 to 15 is expected to grow its profit by about 23% CAGR, which is quite a great number given the base it has. Similarly, a number of other tier 1 names are expected to deliver around 18 to 20% kind of a bottom line growth. And all these stocks would be trading somewhere in the range of 16, 17 times to upwards of 20 times on a FY15 basis. So if the companies are able to deliver or are able to display the visibility of this particular growth rate, I think what one can expect is a similar kind of a performance in line with their profit growth in terms of market price performance can be expected from these stocks. And I think we are in a situation where we are not really seeing a very broad-based growth. So any sector or stocks which are delivering growth, I think the markets have been chasing them and rewarding with higher multiples.
Ashwini, for an intraday trader or a positional trader, which way a trader should lean? Towards capital goods stocks which have given you an entry point, or towards IT where maybe the correction is getting over?
Well, it's difficult to say that IT is going to make fresh highs from here, because if rupee remains strong, IT could have a trading rally. I don't think it can have a sustainable up move. But for tomorrow, you'd rather be with IT than with capital goods, because IT is the one which is starting a short-term uptrend, and probably capital goods is entering one.
Pankaj, NTPC has not been a big wealth creator for